Evening, team. Hope everyone had a great weekend. Some of you took a break last week. I hope you guys had a great break as well and were able to refresh and reset. I surely definitely did and was able to. Um, Other than that, let's get right into it. So, as you guys know, like the best strategy right now in any type of market is to scalp. The holding game is not going to do you any justice. It might work for the short term, and then you have people that buy out months out. You get your drop you're looking for, or you get your pop you're looking for. You're able to take off 20%, catch 100% move. Um, and as everybody knows, that the shorter the expiry date, the more juice the premiums become. Despite depending on which direction you're trading in. And I say that because I love short term. I like trading SPY same day. Um, because you don't need to go heavy. You don't even need a lot of capital to do so. And if you have your levels and you follow them and you trade basically strictly off of them, you can catch a temporary bottom, you can catch a temporary top. Your levels provide points of entry to where you will be getting in and out of your positions. So, for example, I want to focus on SPY. And this week is my main focus going to be Spot as well, Spotify. But I want to talk about SPY. I mean, I'm at a point now where it's like wherever the market goes, I don't really care. I just want to trade in the direction it's trading in, whether for 2 days it's trading up, whether for 4 days it's trading down. Another thing a lot of you do not understand, and I'll explain this a lot more, but the reason, if one time, or let's say every time that we shorted, that we were dedicated to shorting, you notice that those moments that we shorted, we made a lot of money. Same thing with being long. But when I go short, I don't short just to short. I don't short just to be right. I short when the opportunity is presented to have a bigger payout. If I want to scale for peanuts on the short side, I'd rather just continue to do what I've been doing and scalp on the long side. That's just my thing. Because a lot of you don't understand that when everybody's piled on one side, which right now everybody's piled on the short side. Let's just say that. I know over the weekend people are they're long or whatever. I don't care. But when everybody's piling on the short side, look at the premiums. That alone should tell you what you need to know. So when I start seeing premiums on, let's see the side that everybody's focused. Let's say everybody's focusing short, right? That's the topic right now. So everybody's shorting, whatever. Everybody want to crash, or whatever. And I see everybody on the short side. I'm gonna run to calls. Why I'm gonna run to calls is because the premiums on calls are so freaking cheap that 2% pop or a 2% day is gonna pay out 500 to 1,000% on the day. Last week, if you traded SPY, literally that's it, nothing else. If you traded SPY religiously last week by itself both ways, I was watching, just looking at calls, when I had downtime. It was right before bed, honestly. Checked my phone. I looked at the market overnight. I looked at the whole day, and I'm like, okay, I want to watch these for tomorrow. So I just plugged them in. I didn't watch them the next day. I watched them when I went to bed again because I was definitely not trying to watch the market or anything like that. So I watched two specific calls and puts for the mid. Basically, what I look for is I like to find where we will open at and based off where we will close at. And those two levels are going to be where I'm going to focus on calls and puts. And out of those two levels, one of those levels will be basically the level that is dedicated to price action for the day, where you see it, where it spikes from that level up or spikes from that level down, but it always magnets right back to that level. So for instance, last week, um, what was the level? I forgot what it was. It was, I think it was 444 there. That was an opportunity to go short. There was another level too. 417 was a magnet. 417 was a magnet to trade. Okay, so trading that all in that 1 week's candle. Let's go to that. This is a weekly chart. So I'm gonna give you a daily chart, right? When we go across, you can just look. This is SPY. I like using ES, but just looking at this. So the key level here last week was 416.42, right? Look at, you can see where how price reacted off that level. So every time it came up that level, it bounced. It bounced, it retested the lower count, and then it got close enough to the 14 SMA, but then it rejected. And then it came right back down to 423.75, right below that. And then bounced, then it got rejected again. But if you looked at Monday, Tuesday, Wednesday, Thursday, and you see how SPY traded, SPY was paying 100 to 500% both ways. On a Monday, you would have made out with 1,000% playing both ways. You would basically, if you play the overnight, depending on the gap down from Friday, you would have basically rolled into calls at open with half of your profits. And then after rolling to calls at open, you play it up, and then end of day, what happens was a sell-off. And then that end of day sell-off on the same day expiry, you're looking at 0.05 to $2 on a specific strike. And within 15 minutes or within an hour, I mean, most of the trades I've saw, it took an hour, it took 15 minutes, it took 3 minutes. So that's another thing, and a lot of you are like, oh, I'm looking for something. I can't watch the market. I can't watch the market. If you can't watch the market, don't trade in the market. But if you feel like you want to dabble in the market, pick 3 days out the week. Like I would tell you guys to focus on 3 stocks and just master those stocks for 3 to 6 months, maybe to a year, both ways. It's the same thing as just picking 3 days out the week that you want to trade. I hear a lot of people complain like, oh, I'm not trading on Thursdays. I'm not trading Thursdays. Oh, I'm not trading Fridays. I'm not trading Fridays. And then FOMO comes in. If you're telling yourself not to trade Fridays, don't trade Fridays. If you're telling yourself not to trade Thursdays, don't trade Thursdays. If you are done for the day, or if you are done for the week, be done. Don't overtrade. So why compounding works faster when you're trading this way, where you have dedicated days or dedicated times of the day. Me, my favorite is the first hour. And then I like to look at lunch for scalps. And then the last hour, I like to look for a pop. There's always a pop in the first hour and there's always a pop in the last hour. And then midday is where you get the best scalps up and down. 4 different entries, playing long and then playing short, then playing long, then playing short. You do that 4 times. This is a strategy that I use, and this is one I use mentally. I can look at a SPY chart. I go through 15, 4-hour, and depending on the day of the week and depending on if it's the 2 day is ending, that's another thing I look at too, because I look for magnets around the lower count, middle count, and upper count, as well as the 14 and 30 SMA. That's how I play. And if my levels coincide with that, then it helps me confirm that I'm correct. So I'm okay with fighting, but I'm scalping. I'm in, I'm out, I'm scalping. Like if I'm like 50% now, 20% now, you're already taking contracts off. That's another thing. A lot of people, I don't understand why do people keep forcing their hand. If you are done for the day, be done. If you made profit, take it. Then you got the revenge trading side of it. I don't know why people revenge trade. There's no point of revenge trading. Market's not going anywhere. But I promise you, when you're patient and you're waiting, that's the best time to just watch, look for an opportunity, test it out with a small position. If it works, that does not mean play it again right away. That means that's the setup that you're going to make your money repeatedly. Okay, so do that. And that's what I do. So I'm gonna use SPY right now, for example. We got 411.90, 411.99 there. Um, we have a couple of levels. What I like about what's happening is, I'm not gonna lie to you, I always like a gap down, especially if we close up high. And I'm long into the close after a high of the day close. Um, I like to play for a pop to a short. Those are my favorite setups. If we close low of the day and then we gap down, I like to play that quick added short, but then get long very fast and play the gap fill. The gap fill, your gap is your strike you choose. It's another way to play. You can do that on any time frame, 15 minutes, 30 minutes when the market opens. This is a daily chart. So right now, let's say, let's do this. I'm going to show you. So 411.91. Currently, that's where we are currently trading right now. It's currently where SPY is at in the overnight session. Right there. I would like SPY to get under 408.81. A gap down there, there's a possibility it can continue and run straight to 401.37. But immediately right there, I'm going to automatically buy 412 calls under 408.81 upon an open. But I will not size. I always start small, especially it's the beginning of it's the starting of the trading day. So you never size. End of day, you never size. I'm comfortable sizing midday. Why midday? I'm comfortable sizing because by then that's when I know that if I was building a position at open, by lunchtime, I should have my full, 65 to 75% of position already secured. Then other 25, I'll just sit, or I actually won't even add the rest of the 25 because if it's working, there's no point in me adding. And that's another rule I implemented as well. Like, you can add to your winners, but why even add if you're doing well on that small position? Let it do what it's doing. And that's another thing that I'm trying to incorporate for you guys as well. My goal is to get you guys out of the whole hold long, swing long. If you're swinging, swing only if it's a runner. Don't swing because you want to gamble. It's stupid. It's like you're gonna gamble like 20 times doing the same thing, hoping it works out, and then boom, it doesn't work out. That's more money lost. The goal is you want to manage your risk. So in order to do that, you play with less. You don't play with more. Like, you have to be okay with saying, all right, I'm done today. If you took a loss and your loss is your daily goal, you're automatically done for the day. It doesn't matter how many plays are thrown out or given or opportunities are shown or what talk is going on or whatever like that. Like, y'all don't need to focus on that. You need to just focus on the plan. The plan is, if it does not work out, revisit. And another thing, cores. Cores are not meant to hold. Cores are meant to buy time. Cores are there because they are safer. Safer equals buying more time. Safer equals meaning letting it has more time to play out. Doesn't mean it's going to happen right away. Has more time to play out. The more time you buy, the higher the chance that it will hit. The short term, you're just fully risking. So what I do in this case, I always say, if you're 5,000, let's say you have a 25K account. If you're 5K in 2 weeks out, you should be literally $500 to $1,000 in weeklies. This is with a 25K account. And I'm not saying multiple positions. I'm saying about just one position. So that 5K position you have bought time on, you're using that $500 to 1K to build that 5,000 position to become free by scalping. day in and day out, Monday through Friday. So when we did, and this is not even a challenge, you're not doing a challenge, you're not doing like, I don't understand this whole thing with everybody doing challenges and challenges and challenges. It's honestly, it's like a broken record. It's just people clout or whatever. Shouldn't be a challenge. So if you're starting, like, I've learned that when um I did E-Trade 500, no, E-Trade was 1500 and I did Chase 500. So I already know what I can do with Chase and what I can't do with Chase. And I know what I can do with E-Trade and what I can't do with E-Trade. So with E-Trade, I always get the best fills. When I do a market order, I get the best fills. With Chase, limits, I can limit anything on a bid, any side. I can limit 0.01, 0.02, 0.03 with no problem without having an error or like E-Trade would come in if I try to bid. It's like you can't, it has to be within the limits or increments of 5 cents or whatever, or 10 cents. So that's something I have to worry about. Chase, what I like about them too, I mean, and they lag sometimes in the morning, and that's another thing. I mean, a lot of brokers do whatever. So I've learned about them. And then I learned also with Chase, you have to put limits and get your limits as well, always ready, no matter what. So, and then doing both of these accounts, another thing is with that is I'm in and out of both accounts, because if one's performing, they could both be performing well, and they both are performing well. Some trades are the same trades, some trades are different trades. Some trades I bought more time, and then I bought more time than I did in one of the other accounts. But the thing is, my reacting is I got to sign out of this account, get into this account to execute that trade. And then sometimes I don't make it in time, and I'm basically getting out to break even. Or sometimes I let things ride. There's nothing wrong with letting things ride, you know. So I just, but my risk tolerance is just different from everybody else's. But with the E-Trade account, it went 1.5 to 9K in 2 days. I never counted the same day of. Well, you can. It was 1.5, closed at 3K, and then the next day was 3K to 6 to 9, then back down to 7, and the next day was 9.2, and then it came back down to 5. And then when it got down to 5, I stopped. I exit. You know, it's like people think, oh, stop loss is the best thing to have. Yeah, stop loss, you can have that. But me, I'm more of a reacting faster. So with E-Trade, if I get in a position, right? With Chase, there's always an error when I'm trying to get in, log in, check it out, or whatever, or like to get out of a position. It's like always an error, like it's acting up. And if I put an order in, it's been showing delayed quotes. So I have to go into Thinkorswim or whatever. So with E-Trade, it's never delayed quote. It's actually right there. Everything's updated. So when I go to sell, I'm out. And then the thing I like about a cash account is I make sure I spend the amount that so let's say my balance is five. Let's say I started with 1.5K. I want to make it, I have to break this down. So I started with 1.5K. With 1.5K, I use $500, but I don't use 5. I use half of the 5. So this is how I do it. I take 250. I look for tickers that I know they move pretty well, whether downside or upside, doesn't even matter. I look for tickers that I know I can flip $250 with. And my favorite one is SPY. So I'm gonna trade SPY Monday, Wednesday, Friday, right? So I like that. So in the first hour, I buy 2 contracts that are not that even expensive. They're either 25 cents or 50 cents, sometimes 60 cents, you know, so 60 cents equivalent to $60. So that allows me to buy 2 contracts with 250, 12, 18, 24, allows me to buy 4 contracts, but I never go straight into 4. I start with 2. Sometimes it pops and makes a quick 20%. I don't sell. I wait because I'm like, okay, that just was a test. So after that test happens, what I'm doing, I'm waiting because I want to build this position. So I add. It comes back down to the level where I was just at. I added, but I noticed that I got in at, let's say 25 cents. It comes down to 28, and 28 is the bid. It's not breaking that. It's not breaking that. So it's above what I paid. So I add there. right? And then it starts to climb. So before, if I see that, okay, this is basing out, let's say like right now where we at, we're at 412, right? That's where we close at. If I see it's basing here, right? I'm gonna show you guys this. So 411.91, I see it's basing here, right? So I'm gonna add to my 414 calls. I'm using 414 as the number, just to give you an idea. So I'm gonna add here at 411.19, right? I already got in at 2 contracts, right? There's gap down here. We gap down open to 411.91, came just below it here. So what I do, I buy 2 contracts. I want to see what they do. 2 contracts, yes, it's nothing to most people. To me, you can do damage if you know what you're doing. So I buy 2 contracts. So what happens, it pops, it comes here. So I paid 25 cents. Now it's worth, let's say 38 cents, right? But then what happens, it stops there. And then it comes right back down to where I bought it at. But it comes back literally to 411.91. Now the price is 28 cents. That's the bid. Ask is 29.30. Bid's building. Ask is decreasing in contract size. So I add 2 more. Now I have 4 contracts. Okay. Now that I have the 4 contracts, my budget is 250. I don't want to use more than 250, and I don't want to use all of the 250. So if my goal is max today, I'm spending no more than $500. I'm gonna break that down in so many different ways. I'm breaking it down into 4 ways. I'm gonna find contracts where I can buy either $50 in contracts or $100 in contracts. $100 in contracts allows me to buy 2 contracts. $50 in contracts allows me to buy 5 contracts with 250. So you do that math, you play that, and what happens is then I got that 250 and I still got 250 left of that 500. So I scalped the long. My first target would be, of course, start selling here. So I have 5 contracts. I sold 1, 4 left. Next target is going to be in between the 14 SMA here, which is the blue line, and it's going to be 416. I got the 414 calls. So already we at 415 last price. What happens? Now I'm still on 4 contracts. We're at 416. I'm taking 2 off there. Now I have 2 contracts left. Those are the 2 contracts I started with. All right. Now at this point, you're literally 50 to 120% in profit. So here I see there's a lot of rejection coming at 416.14. Price cannot break 416.14. So with those last 2 contracts I have, even though I only, of the 1,500 that I have, and I only wanted to use 500 on the day, and I only used 250 of that. Now I have 250 left. I'm going to roll 2 more contracts. Well, it's going to give me equivalent. Well, it's going to be 4 contracts. So I'm going to roll those 2 contracts into puts. I'm going to take 414 puts now. I was in calls. So this 414.42 level is going to be the magnet. It's going to be the focus. This is where the rejection happened. This is where our red line lower cal is. See it vacuum down to that after rejecting the 14 SMA and rejecting the 20 SMA here. 20 SMA is green. All right. So with that, so what's gonna happen is now I'm in 414 puts. So what happened is when I rolled into 4 puts for the 414, I paid similar price as I paid for the 414 calls when they were trading below 411.91, right? So what happens is now it's like I'm basically trading around where I traded the long side, now on the short side. Sometimes it's not necessarily exactly like that. You'll probably pay just a little bit more, maybe 10 cents more on the opposite side, which is still okay. But as decay goes along, by 12, you start seeing decay hit. So what happens is now I got those 4 contracts, 2 sold. When they rolled into the 4 contracts, those 2 sold, that's actually profit. Now that's 4 contracts, literally with I could have bought 5 contracts, which would have been equivalent to the 250 using the whole 250. But if you don't have to use the whole 250, why even think about using that? So in this part here, I'll save that last $50 or whatever. Might not even have to. And I will basically be locking in at 414 of those 4 contracts, 3 of those contracts. And if it keeps going down, I still have 1 to ride. And then you can be done for the day. So that's the strategy I've been using. And that strategy works. It's compounding. It's compounding, not risking so much. Like, would you rather take a loss on $25 loss or take a $200 loss? That's the thing people are not looking at. Like, I'm looking at the long side and short side of it. And I'm not talking about puts and calls. When I say long and short side, I'm looking at the long side of how I'm going to capitalize with 250. How can I flip this? In E-Trade, I'm allowed to do that because I can roll the position. If you're trading short, you can roll right into long where you feel it hit your target and start rolling. I showed you I did that. That was the first trade in the E-Trade account. It was a roll, and that allowed me to do what I did. And it was a 250, and then I rolled down. I rolled down from calls to puts, 250, and I think it was XLE. And then we rolled back into calls where I had like, I think $75 left in cash to use, which I had way more than that. But of the budget for the day, not to go over, I was able to use that, and I made the money on the long side with that. And then I sold that. And then you're done. So if you look at it like that, stop looking for, there's no guaranteed setups. The only thing that's guaranteed is your execution. And by that, it's only guaranteed if you get in and get out when you're supposed to, not on hope. Get out when you're supposed to. And when you're supposed to is by your levels that you create, that you drew. Okay, so with SPY, that's what we're gonna do all week. It's gonna be very simple. And like for the past few weeks, I mean, despite I went on vacation, came back, I'm still always on it. And I'm still gonna continue to break this thing down to you guys until it's embedded in you. And this is gonna be something that's gonna help you along the way. You guys are trading 50,000 tickers. Stop doing that. It just doesn't make any sense. Trade what makes you the most money. You master that, that's it. Like SPY, you can just trade SPY and trade SPY and trade SPY and be done. So with that being said, going into Monday, this week's gonna be pretty interesting, okay? SPY is definitely on my list. Looking to go long, I'm looking for a gap down. I would love a gap down. To be honest, stocks are down 40, 60%. Going into May, everybody's already thinking long. I'm just thinking price is going to tell us immediately what's going to happen. There's going to be a lot of BS going on this week. But as long as we're under our lower count 15-minute, you gotta go through every single one. You got 45 minutes. We're there. Sometimes it's okay to allow price to get all on every time frame, get below that lower count. 4 hour, same, 12-hour, same. Go into bigger time frames, weekly. We are at the lower count and we're still inside the Keltner channels. We're right there. So I would like to see how this week is going to open. Down, create a hammer, go inside. Max close up would be 423.75. Or if we open above 416.47, risk of running to 423.75, rejecting there, buying the lower count as the put strike. So I'm going to repeat that again. If we open 416.42, we will have to close above 423.75. But at 423.75, this level here, that would be a nice way to short again, but you will short small. You would test that to short. It's going to be pretty interesting. So my second focus this week is going to be spot. Spotify was doing usually with what I was seeing with BYND. It's not all about setups. And people think, oh, same setup, so they're gonna have the same move. That is not true at all. Like I explained with BYND, you just see like they were accumulating. You don't see it. You don't need to look at flow. I don't use flow. You can see it just in volume. You can just see it at a price. You're like, if you can walk away, you can trade for the first hour, 9:30 to 10:30, right? BYND goes from opens down to 35.63, and by an hour later, it's at 37.83. And then 2 hours later, it's at 36.43. And then what, an hour before close or 2 hours before close, it's sitting back at where it opened at, or that 37.83. If it's at that 37.83 and you see that it keeps magneting there, it's like you can just see if they're adding a short or they're accumulating. You look at the bids, you see a high volume in pre-market and the bid has a nice size on it. That's them shorting. And I learned this just from experience and watching. However, everybody else, everybody should this is how I see it. So when I saw that with BYND, then it gapped up first off. And then when it opened, looking at the bid, I'm seeing the size, I'm looking at volume in the pre-market, I'm looking at whatever news or whatever. It wasn't even with the McDonald's one. And I'm like, they're shorting still, but they're accumulating. They're shorting down here, but they're accumulating at the same time. It's like they're covering here. And that's why it keeps magneting, and it's like they're containing it from moving too fast. And as you can see, within seconds or minutes, like how quickly that thing moved. I think it was 35 to 42 or whatever that day. But let me get back to spot. I don't want to throw you off with that. But that'll be something I'll talk about Wednesday or Tuesday. No, Tuesday, I'm going to do a video on BYND. So Spotify, what I was noticing was market was coming down Friday. Spotify was holding. It hit 107, came down to 105, 106. It was at 105, 106 for 2 hours. Market started pulling back more. It came down. Market jumps. It jumps back up to 105, 106, right? And it's there, comes back down. Now it's at 103 to 104 as market's pulling back. The market's pulling back nice, like even bigger, right? And I'm like, damn, this feels like BYND. Like they're accumulating. They're doing something. They're waiting for something. So off the back, look at this chart. We have a weekly slight spinning top. Depends on, it's however you see fit, right? 948, 94.81 was last week's low, right? Bounced off of that. We're looking for a reversal. 1114, well, 114.85. We need to close above that. Testing the 121.75, which would be the lower count, would be nice. Hence the 110 calls, 105 calls. Very smart to stay at 105. When trading for specific strikes, you trade in between two of your levels, your resistance and your support. Here you got 94.81 and 114.85. So 94.81 or 14, that's about 20 points between each other here. Yeah, that's about 20 points there, right? So a bit of that would be 10 points. So you go 10 points down from 114 and you go 10 points up from 94.81, which would be 104.81, and that would be 104.85. So 104 was where they were accumulating at a lot. We closed below that. And this is a lot about numbers too. Like everything just starts making sense. The more you just pay attention, you look at your candles, you look at your ranges, and ranges are a big factor. We closed below that because the market completely sold off. So going into the weekend, and somebody was saying about Japanese holiday was Friday too, Chinese holiday or something like that. So they were off from the markets or whatever. But just look at how things move very fast. When SPY jumped 2 to 3 points, you got like a 5 to 10 point spike on certain stocks. Volume or not, algos or not, pay attention to these things, right? So going into this week, my focus is going to be between 104, 105, 107, 110, and 115 calls. I wouldn't even care about those right now unless we would have to open up above here, which is about 108 or 107. If you open above that, might do justice. So that's the weekly. I'm gonna look at the 2-day because I know a new 2-day starts Monday. So here's your 2-day. This shows 95.22 as a low. Okay. I think it was off. Well, I gotta readjust this, but I'll keep it as is. It's pretty close. So here's your 2-day. 428. Next one starts 5-2. So 428. Hold on, give me a second. 428, 29. Yeah. So so no. 5-2 is the next 2. This is weird. My thing is off. Okay, so the next one starts the 2nd. Oh, that's tomorrow. Yeah, I'm bugging. Today's the 1st. All right, May 1st, 1st of the month. So next 2D starts tomorrow. The new one. This is going to be pretty interesting. What would be pretty cool here is we get a double bottom retest. I'm definitely already freed up cash to add here. So I want to add here. If not, I will look for a gap above here. So opening here was 96.91 and it closed at 101.65. So a gap, not even a gap above that. I mean, we closed there. So I would like to see a move off of that, retest that lower count. This is on a 2D, and then 2D average range for that past 2D was 11 points. Prior to that one was 18 points. Prior to that one, 9 points. Again, 20 points. You get the feel of it. This is possible. It could possibly be a short-term bottom. I'm not too sure, but we're going to play that. We're going to play it both long and short. You get a 5 to 10 point range on average. So keep that in mind. How you find out your average daily range? Go to your daily charts. Get your daily candles. My goal and my whole angle of education is not to get you guys to marry tickers. It's to get you guys to be legit traders. It's get you guys to make your own decisions without always having to rely on somebody else. The goal for me is to make sure you find your purpose, you find what works for you. And this is why I say everybody is different. Everybody can have a similar strategy, but everybody's strategy and everybody's approach is different. And that's what everybody needs to understand and learn. And there's nothing wrong with having your own strategy. It makes you unique. It makes you who you are. It's why I'm called the Lotto King, because I have a strategy that works always for lottos. Not always in the sense of it's guaranteed, but this strategy always presents itself on different tickers, depending on the setup, depending on the time of day as well. Okay, so I want to get that. Sometimes it doesn't have to always be about going live and just charting. I can give you breakdowns, mental breakdowns through the charting. And it's not about tickers like, oh, where you think this ticker is going, where you think that ticker going. I really don't care where the ticker goes. You shouldn't ask where a ticker, where I think a ticker. I can tell you a ticker's going to 190. Doesn't mean it's going to go to 190 next week. Doesn't mean it's going to go to 190 in a year. Nobody can tell you when something's going to go. I get lucky when I make these calls that I make because it's just something I see. It lines up, and everything that I teach, it's why I'm so accurate at times with spikes happening right before they happen. We're getting into a position and the spike happens. And then when I'm like, oh, well, because I'm like, oh, I'm giving this play this much time. And when I give it time, it's already moving and it's already hitting levels that I wanted to at least give an hour or two to play out. And literally doesn't work the way I wanted to, but that's in it, but it still works out the way that I saw it. It just happened in a shorter amount of time. So tonight's live was that. You guys overtrade, and I see it. So it's like I'm like your coach. You know, I'm like that little angel on your shoulder watching over you guys. I send you guys alerts that say lock in, focus, don't hold, some reminder, you need to hear it, and then I don't know, people still do it. I don't know why, but it's like, oh, who's still holding this? Who's still holding this? Who's still holding this? I seen people holding cores that this is the funny part. Every position works, but every position has an expiry. And by expiry, I'm not talking about when the strike expires. It has an expiry to where how long that you have to be in that position. And who determines that? You do. So you could be in a core and the first week it goes up 30%, but you want to hold on to it. That's on you. See me, it goes up 30%, and that's all it gives me by Friday. I'm taking it and I'm waiting until Monday to get back in and see if I get a better chance of buying more time or getting back into that position at a cheaper price. You're getting 2 days of decay over the weekend. You're not even knowing what's going to happen over the weekend. And what happened? BYND came back down, came back down, it came back down. What I did, I scalped both ways, scalped it. And then I started adding to where I see, and I was like, it's going to gap down, you're going to get long. We got the hammer. We got the hammer came in. And then what, the day after that, we had that move where it gapped up and then came back down, engulfed. And then the next day, what happened? We got that news, got that spike. So these are things that I pointed out a lot during the trading day. And a lot of you guys are taking your notes, and I love that. I see it because y'all put the little note, the note emoji, and everything that I write down in Ninja Alerts, I actually copy and paste it to my notes too. Because it's like, all right, these are things I'm going to build. So going forward, it's like a rule book. It's the See Private Take Profit rule book when trading, and you don't have to follow rule by rule, but you can just incorporate these different rules into your everyday trading style, however you trade or agenda, whatever. You just apply it. You check off if you completed that. And if you didn't do it, you basically put a note why you didn't, what caused you not to. Trading is a job. It's like homework. It's work. It's work. Like anything else, it's work. Studying day in and day out. If you're up $50, take the $50. When I tell you guys are posting daily profits and goals, when I see you guys posting daily profit and goals, it makes me happy because I get to do my little teacher and come in and be like, okay, so you're upset. Well, you're not upset, you're happy. You're like, you could have been up more, but let me tell you, you made $123 today. Tomorrow you might make double that. The day after that, you may make half of that. But it keeps compounding. It keeps compounding. But if you're transferring money out, you don't even have to worry about that. That's another thing. People want to just build up an account. You could build up an account. You start with 2,000, you get it to 4,000, take the 2,000 out. Mentally, you keep cycling that. Oh, I doubled the 2,000. Oh, this is easy. That's your comfortability. You have to find your comfortability. My comfortability, it varies. Some weeks, it depends. If the weather's going to be nice, I would start with 500 or 1.5K. Why? Because that's my comfortability. Good weather, it just sparks something in me. I don't know what it is. I know I'm going to be outside. I'm going to go roller skate. I'm going to do something to keep my mind stimulated, keep it busy so I'm not watching the market. And like Friday, I didn't jump into anything right away. I waited till I think it was 11, 12 o'clock. Because everything, I was like, Dad, this is up. Like, I wanted it cheaper. So since I couldn't get it cheaper, I'm not going to get in there. I'm not going to play it. But if I look at the put side, but if it's not a short right now, but the put side is cheaper, I'm like, you know what? Nah, let me not do that to myself. I come back and look later, the let me not do that to myself was exactly right. If I would have bought those because they were cheaper, I would have lost. Same way on the long side. Like I look at everything. You have to play when it's telling you to play. When your levels are telling you to play, they tell you when to get in, when to get out. Not somebody else. Not like you got to trade based off of what you have on your chart, your levels. If your levels and somebody else's levels, it doesn't line up with mine, that doesn't mean you're wrong. People want to have the same accurate levels as mine. You guys don't know how I process things. I process things so different. It's crazy. And it's why, like, even my own levels, I go against them sometimes because there's a lot of different factors that happen with that. It's what I'm seeing where volume's coming in at a certain price, or this price has been stuck here all day, then there's a reason for that. But that's what I wanted to focus on. I'm just giving you guys a heads up on this week's buy spot. BYND still focused. That's a summer play. It's did its first move already. That was a test. 20 million volume on that day. Average true volume, I think I forgot what it was, about 10 to 20 million or something like that weekly volume. So let's just see and just take your time this week. I want y'all to take your time. 1 second, let me stop this. I'm stopping.